Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for April 11th, 2014. The last week of our Western Canadian events in Vancouver, April 12th, and Surrey, BC, April 15th. I will also be doing a live webinar April 17th for those not in the BC area. To register for any of these events, go to stockscores.com/register. Those registered for the live Vancouver events who show up to one of those events will receive one of my books free, courtesy of Disnet. All right, let's talk a little bit about dividends. With the turmoil in the market over the last couple of weeks, many investors are looking for the safety of dividend-paying stocks, migrating away from those stocks that have been in these parabolic upward trends. Now, a reminder that dividends divided by stock price gives you yield. So if you get paid $3 on a $100 stock in a year, you have a yield of 3%. Keep in mind, when you look at yield, you're looking at what the stock has paid in the past relative to the current stock price. And there's no guarantee that what was paid in the past is what will be paid in the future. It could be more or less. With that said, there is a filter on the Stockscores Market Scan that is useful for finding stocks that pay dividends. I like to look for stocks that have good sentiment stock scores as well as a yield when I am looking for something that is what would be considered a lower risk, more of a investment grade stock. Now again, be cautious with yields that you see on our site or really any source, because they can be deceptive if the stock price has fallen a lot. You know, the stock or the company could have paid $1 in dividends over the last year, but if that was based on a stock price of $20 and today the stock price is $10, the yield is going to be high, but there's certainly no guarantee that the company will continue to pay that yield. Let's jump over to stock scores before we get into this week's charts, and I'll show you how you do this. Now I'm going to select one of my preset scans. I'll use the Stockscores Simple Scan, which is the scan I like to use for looking for position trades. And you'll see right here there is a couple of filters for stocks that pays dividends, and I can then enter a yield. I could say I want yields between 2% and 8%, for example. Now, when I run that scan, perhaps I want to do it just on the Canadian market, I can get a list of stocks that pay a yield between 2% and 8%, meeting the other criteria of the Stockscores Simple Scan. Then, of course, my final step is to view the charts using the chart viewer that is connected from the Stockscores Market Scan, and I can go through these charts one at a time, looking for those predictive chart patterns that we talk about often here. All right, let's get into the analysis of this week's market action. The S&P 500 fell this week, as did all of the North American markets. The S&P 500 is just tickling through its trend line that has been underway since early 2013. I don't consider this to be a terrible chart yet because the rising bottoms are still intact. It is a concern that that upward trend line was broken. It does set up for the potential to move down to the longer term, more shallow upward trend. That's a fairly significant downside. We're at just above 180 on the S&P, and that trend line's at about 167 or so. So, you know, there's 5% more downside there. But again, I don't see this as a really ugly chart yet because the cycle of rising bottoms is still in place. Now, I've brought the chart of the Nasdaq 100 into this week's discussion because it is really the source of most of the weakness. The Nasdaq 100 chart went parabolic, and many stocks on the Nasdaq market really had this very steep upward trend because investors were chasing after some of these stocks. You know, you think about stocks like Netflix, Tesla, some of these high-flying stocks that, you know, people really loved a couple months ago, and today they're all running for the exit door at once. That has caused this steeper upward trend line to be broken about 3 weeks ago, and it really sets up for a bigger pullback in Nasdaq. I think what we're seeing in the US market is money rotating out of these high-flying, what I call parabolic stocks, and looking for safety. They're arriving in stocks that pay dividends, they're arriving in bonds, and they're arriving in the energy sector. Now, the fact that they're arriving in the energy sector is one of the reasons why the TSX index really doesn't look as bad. You can see we had a little bit of weakness this week, but we are not threatening that upward trend line. And I've said for a few weeks now that I expect the TSX to outperform the other North American markets simply because of its emphasis on commodity stocks, most notably the energy sector, which has really been the leader in the market over the last couple of months. TSX Venture also has a big concentration of the more speculative commodity stocks, and it is in a pennant pattern. We're at the tip of the pennant where this market is going to break one way or the other. Typically, when the trend into a pennant is up, it will break to the upside, and that sets up well for continued strength in the TSX Venture. After a number of years where the TSX Venture was really an ugly place to be, I see this as a real strong place to be, and I'm quite bullish on the TSX Venture market. This is another area of concern because the biotech sector was the strongest of the sectors over the last few years, and it really went parabolic, and now we're seeing everyone run for the exit door at once as though someone yelled fire in the biotech sector. And I think it's quite likely we could see further weakness as we are moving through the current middle trend line there. No doubt that we could see it move down towards 180, 185. The Treasuries are this mystery that we've talked about for a number of weeks because it made little sense why people were buying into Treasury bonds when the U.S. Federal Reserve was scaling back its purchases. It starts to make more sense now that we're seeing weakness in the market. It's apparent that money is coming out of stocks and looking for safety, and so they're buying Treasuries. Will that last a whole lot longer? Well, we still remain in a downward trend. I think what we're seeing here is this market coming back a little bit from some oversold conditions. It's going to come up to that long-term downward trend line right around 113 right now, probably get stuck and roll over and start to move lower as the overall stock market stabilizes and money moves back into equities. US dollar weakness is a positive for many of the commodities. It makes commodities cheaper, and that's helping, again, the Canadian market. And here we see a big downward move in the US dollar this week. It still has very strong support at the green line that I've drawn on the chart, so I don't see considerable downside, but my outlook as it stands right now is bearish. Gold continues to work on stabilizing after its, let's call it a 2-year downward trend, almost 3-year downward trend. It is not yet broken the downward trend line in terms of the less steep one that we show here on the chart in red. And it could break that. We are building rising bottoms toward that. My outlook for gold is positive, but I think it's going to take time and is far from certain. Oil market making a good resurgence over the last little while. Big picture, oil is still stuck in a trading range, but if you've gone to get gas lately, you will know that the gas prices are going up because oil prices are going up. That's a bit of a constraint on the consumer, and it may hurt the stock market a little bit there. And finally, fear. You know, when you see all of the weakness in the market, you would think that people would be buying options as protection, which is what drives this chart, the VXX or fear index. The reality, though, is that the fear index, the VIX, is not going up as much as you would expect given the weakness in the market. And I think this supports the idea that investors are not bearish on stocks. They're just taking money out of some of the overbought sectors and moving it into some of the stronger looking sectors. And I think that's a good sign for the long-term prospects of the stock market. All right, US stocks, I have moved my rating down to neutral because we are flirting with that upward trend line, and bearish in the short term. The Canadian market has not broken its upward trend line, so I'm bullish long term, but a little bit of weakness in the short term, so I'm neutral there. Gold, neutral on both accounts. It is stable, but it still has to fight that downward trend line and break through it. Bullish in the short term on oil, neutral longer term. Hot US stocks are getting punished with money rotating into bonds in some of the sectors that did not participate in the run of the past few years. Expect further profit taking in these parabolic stocks, but this is more of a sector rotation than it is a bearish outlook. Gold stabilizing while energy continues to lead. Well, that has been the Stockscores Market Minutes for April 11th, 2014. Have a great week in the market and trade well.